everyone. Good morning. You're watching a special edition of Business World Live. I'm Danie, Laurel.
And I'm Delos Santos. Well, 2020 proved to be a turbulent year for both the public health sector and the global economy. But it was especially difficult for the Philippines, which saw its gross domestic product sinking to all-time lows thanks to restrictions brought by the coronavirus pandemic. The GDP print saw a downward spiral as early as first quarter of 2020, from a stellar 6.7% growth in the final quarter of 2019. The GDP contracted to negative 0.7%. This is a revision of the PSA's initial record of negative 0.2%, and the first time the country saw a slump since 1998. The decline was expected since President Rodrigo Duterte did place the entire country under quarantine back in March to slow down the spread of the deadly virus. But the magnitude of the fall was not anticipated by the government and private economists. Due to the nosedive, the Philippines was among the worst performing economies in the world and the worst performing country in the ASEAN. However, Acting NEDA Secretary Carl Kendrick Chua said this was simply the price we had to pay to save hundreds and thousands of lives. By the second quarter of the year, the country was greeted by an even steeper GDP decline. This as the Philippines plunged into a technical recession following a GDP print of negative 16.9%. That's due to the back-to-back declines in manufacturing, construction, transportation, and consumer spending. This is the worst recorded GDP figure since 1981 or since the time of martial law. Economists say the steep decline should serve as a wake-up call to the government to finally turn its attention to the economy, as both life and livelihood are threatened by COVID-19. In the third quarter, the Philippines posted a less severe contraction of 11.5%. With this GDP figure, economic managers believe that the worst is over for the country's economy. Despite this, there are reasons for hope this 2021. These include the ongoing developments in anti-COVID vaccines, continued infrastructure push, the signing of the 2021 budget, and the possible early enactment of key legislation such as CREATE, FIST, and Guide Bill. However, many challenges remain. These consist of the effects of the consecutive typhoons that hit the country, logistical issues of vaccine procurement, and the new mutation of the coronavirus strain. Now, we already bid 2020 goodbye, but the scars of the pandemic year is expected to stay with us for quite some time. To talk about the year that was and how things are shaping up in 2021, we have Professor Ronilo, Balbieran, an economist from the University of Asia and the Pacific. Good morning, sir, and happy New Year.
Good morning and Happy New Year to everyone.
All right, sir. So kick things off. What can you say about our economic performance in 2020? Was enough actually done to help the country stay afloat, especially considering the fiscal stimulus? Would you say that it was lacking in some parts?
Well, I think the ADB report has spoken already that it is somehow lacking of fiscal response in terms of actual cash flow. No, so the most important thing in any recession is able to pass that law on the Arise bill. So, but anyway, pass is pass. We look forward to 2021, and we're very happy that the national budget was signed on time. So that already incorporates some of the intentions or stimulus package bill, and really boosting up our budget for infrastructure, for logistics on vaccine. So we're very happy. So pass is pass, but looking forward to 2021. We have some bright spots to look forward to.
But would you say that at least the worst is over for the economy? Would you see GDP at least slowly getting back on track?
Well, since we are the lowest or one of the lowest performers in Southeast Asia, the base effect tells us that we should bounce back at least 4 to 5% next year, at least.
Mm-hmm.
So this will be critical. This will be hinged on how the government will roll out the projects, the programs, the activities, and if we do our calculations right, our efforts together, we can actually perform at more than 7 just because of the base effect and our ramping up of our activities for our businesses and other economic activities.
Okay, you did mention earlier about the 2021 spending plan, and one of the things that's very striking, at least, is that there's a bigger allocation for the Department of Public Works and Highways, pretty much dwarfing the spending plan for the health sector here. Would you say there's an over prioritization of infrastructure, given the fact that we are still in a pandemic, or would this still be the right direction to take?
I think there's no other way. You have to have those joint strategy, the vaccine logistics, but at the same time, you have to focus on the revival of the construction industry. Because if you can see the third quarter result, almost all of the sectors except education and construction have actually reversed their trends. So it's important that we focus on reviving the biggest, largest impact on the economy in terms of multiplier effect on household income, uh, employment multiplier, and overall growth of the economy. So it's very important that we really push construction, both public and private sector, to push that generation will lead to household income, and that will actually boost our overall recovery of our economy for 2021. That's very crucial. In fact, almost all countries in the world are actually trying to figure out how to really boost their construction, because construction short term and long term effect. Short term, it's an employment strategy. Long term, you are building your capacity for productive activities. So very important.
The question is, how do you balance that with the needs of the health sector? How do you properly align the infrastructure program for the country's health needs, given, of course, the pandemic? And at the same time, what do you think should be the involvement here of the private sector?
I think the balance there is to really, while you're focusing on the logistics of the vaccine, you redirect much of the infrastructure budget on health infrastructure. So that's the balance. You use that budget, build more hospitals, more clinics to the rural areas, so that those clinics and hospitals will also be used as supply chain points, supply chain connections. So those will serve as well as redistribution points of our vaccine. So multiple effects, no? Talagang you spend on something, this will have two effects already. So you spend on infrastructure, but infrastructure on health, and that will actually generate employment, that will address our hunger. That's the balance between life and life,
Mhm.
address the livelihood, but at the same time, focusing on health will focus on life. So I think that's the balance. Let's focus on spending public national budget on health infrastructure. Private sector, let's encourage. Let's do it together with private, the logistics sectors, on the investment and banking sector. Let's figure out a way on how to install cold chain storages, reefer vans, to make sure that we are ready to receive all these 70 million vaccines.
Okay, since you already mentioned about vaccine procurement here, is the government moving fast enough, and are we at the right direction here? Especially like what you did say, cold storage. Are we prepared for vaccine logistics?
Um, I think we've been talking to I've been talking to my friend, the president of the Cold Chain Association of the Philippines, and the president of the Supply Chain Management Association of the Philippines. So on the big time receiving the vaccines, we somehow have the capacity. But I think the problem is to redistribute it. So you may have some storage in the major cities of our country, but how about distributing it to the provinces? That would be the biggest challenge. No, so we bringing it there. So to make enough refrigerated vans to make sure that we address the last mile delivery of these vaccines.
Mhm. Now, moving forward at least to 2021, what's going to happen this year? What sectors are you banking on? Especially, we did see, of course, the tourism sector being badly hit. You expect a resurgence. On the other hand, you have e-commerce really booming during the pandemic year. Do you expect that to be sustained?
Yes, I think Filipinos are, are one of the most adaptable type of people in the world. So since we have already experienced the benefits of online commerce, no? Electronic commerce. DTI ASEC Jean Pacheco refers to it as easy commerce. E-commerce is actually supposed to be easy commerce, and we have seen more than one year, 200% growth in online payments. And so once our country, our people have benefited, have experienced that ease and speed of e-commerce, we think that it will continue and it will even accelerate for the next 5 years. So the would be e-commerce. And I've been talking to DTI, and they've been preparing all their policies and programs in relation to addressing consumer complaints. So, kasi the most important there is to establish trust. So, while you're establishing speed, but at the same time, you have to establish trust. Know that they can run to our government in case that there are defective products, etc. So the DTI e-commerce office is moving very fast in coordination with other agencies to make sure that we have enough support for the e-commerce, because this is to fast and faster for 2021, because we don't know what's going to happen with the second wave and whether we're infected already by that
Mhm.
second wave. But one thing is for sure: stay at home, but let us continue reviving our economy with all the purchases. No, so it's all about cash flow with that economic revival, and there's no other way but e-commerce. And but I think the good news is the e-commerce roadmap will be launched, will be released next year or next week. And the coordinated efforts of the government in terms of addressing our infrastructure, our security features of e-commerce, at the same time the overall speed of commerce and market access of our businesses. No, very important.
Okay.
That's the overall economic recovery, at the same time being safe and physically distanced.
Okay, it's all about really providing a healthy balance between life and livelihood as we help the economy bounce back. Thank you very much for your time this morning, Professor Ronilo Balbieran, economist from the University of Asia and the Pacific. Thank you, sir. Good morning and Happy New Year.
My pleasure.
Despite all the challenges of last year, 2020, one thing was clear, at least for the markets: it could have been worse. Now, to give us a summary of how the bourse performed during the most volatile trading year in recent history, we have with us Ramon Monzon, President of the Philippine Stock Exchange. Good morning, sir, and Happy New Year.
Hi, good morning, Danie. Happy New Year. I hope it will be a happy New Year for
Let's
well,
definitely hope so, sir. Well, one good thing was that we had ended naman 2020. Nevertheless, of course, still in the red, but not nearly as bad as, at the peak of the lockdowns, when we were down by more than 40% actually. And nevertheless, of course, it was expected that we wouldn't necessarily meet the targets that we had set pre-pandemic. But to what extent did we diverge from your pre-pandemic targets and the way that we actually performed?
actually, our biggest hope at the beginning of the year, when the REIT implementing rules and regulations were finally revised to reflect, what the real, provision should have been, we're expecting a lot of REITs for the year. But unfortunately, I mean, right, the first quarter we got hit by this pandemic. But nevertheless, I mean, we were very happy to have had a REIT listing, during the year, in the midst of the pandemic. and from one of the biggest property developers, which was Ayala Land. They listed a REIT. They raised more than 13.9 billion. So it's a very successful launch. Of course, it was the only REIT we had for the year. I mean, like I said, but that was a big disappointment we had. We were expecting more REITs had the pandemic that hit us.
Mm-hmm. But sir, when you actually gave the numbers just before Christmas break, we actually had Finance Secretary Sunny Dominguez lauding the performance, especially when it came to the trading volumes. So it wasn't nearly as thin. What spurred that, considering that a lot of the foreigners had actually exited? Why was there much more pickup when it came to the domestic markets compared to usual?
Well, just to give you a background, I mean, for 2019, our average daily trading volume is about 7.29 billion. And
Okay.
from January to October, we were only hitting 6.37. Our volume was really down. But come November, especially with the announcement of the discovery of the vaccines, just for November alone, our daily trading volume hit about 12.95 billion for the month,
Mm-hmm.
and another 9.66 for December, bringing our from 6.37 all of a sudden at year end we have a higher average daily trading volume than 2019 with at
Mm-hmm.
7.3 billion. So that was a big surprise. What caused that? Like you said, uh, the foreign investors obviously have left the market. They've
Right.
sold about 129 billion of net foreign selling for the year, but obviously the local investors were there to take up the slack. Okay, so in fact, in the profile of the market, foreign versus local investors, foreign investors prior to the pandemic had 55% of the comprised they comprise 55% of the market activity.
Mm-hmm.
Now, I mean, they're 45%. So it's a reverse. So obviously, the local investors are here, to take up the slack. We had a very, healthy increase in the number of retail investors. Uh, we used to average about 18% retail versus institutional in 2019. Now we're all, over 25%. So these were the positive things that happened during the year.
Sir, in terms of the go
Another
ahead.
big thing,
Go.
in the pandemic, we were able to list the biggest IPO ever in the history of
Correct.
PSE. So,
Confirmed.
those were the good things, positive things.
I'll get back to you on that IPO, sir. But let's focus on the net foreign selling. They had actually started trickling back in na, after June, July. And then, again, this exodus started persisting. Why is that, despite the fact that the economy had reopened, and like you said, there was so much faith from the domestic investors, you're trying to make some structural changes in terms of, more indices, for example, short selling. Is this what it takes for them to be coming back in? Or is it a general risk aversion pa rin, when it comes to the emerging markets?
Well, like I said, we had about 2.24 billion of net foreign selling. Sounds very bad, okay? But really, if you compare that to our neighbors, you have Malaysia, Thailand, and Indonesia. I mean, Thailand alone had about 8 billion of dollars of net foreign selling. So uh, in absolute terms, we look bad, but relatively, we were not too bad. Uh, and what's driving all of this? Really, it's the exit from the emerging markets. I think into the developed economy markets. You've seen what's happened to the U.S. market. It's just really taken off like crazy.
Sir, let's talk about the IPOs you had mentioned. It was, you had Marymart, very small compared to Converge. You had the biggest one, and then you had a REIT. Was there any sort of trend on which ones had decided to take the risk and tap the very volatile markets? And to what extent was their performance in their debut an encouraging sign for more to list, considering that 2021 will still be, to a certain extent, quite volatile?
Okay, so like I said, we had three IPOs in 2020. One of them was a REIT, and then we had one listing by way of introduction, which is the Altus Property Ventures. The Altus, A REIT, and Merimart right now are all above water. meaning their present price is higher than the IPO price. So the investors are making money there. I mean, for Converge, they're down about a little over 10% from their offering price. So that's I mean that's the status of the IPOs.
Okay, sir, is this an encouraging sign? How are investors reacting, or corporates reacting to that? Do you feel that there's actually interest for them to be tapping the markets and saying that 2021 might be less volatile in terms of raising equity?
Well, obviously, we have a lot of capital raising activity in the pipeline just for the first quarter alone. No? We have the stock rights offering of Ayala Energy. We have the convertible preferred share offering of Cebu Pacific. We have Double Dragon REIT IPO. So we've got a lot of capital raising activity in the pipeline. So looks like the the corporates are now turning back to the equity markets for their capital raising, in spite of the very low interest rates in the bond market or in the bank market. But at some point in time, a company cannot keep borrowing. I mean,
Right.
they have ratios to maintain. So at some point, they need to raise equity capital, and we see that happening now.
So that was actually my next question. Is the bond rally of 2020 sort of mutually exclusive with the fundraising and the equity markets? In that, do you envision a rotation back into equities next year? Even as the Bangko Sentral has already said that they will be keeping the rates low until 2022.
The trend before, there were more fundraising activities in the equity market compared to the bond market. Okay, I'm talking about the corporates, not the government securities. There was a big turnaround in 2018. We saw our capital raising activity go down from about 180 billion a year to just 100 billion, and we see the fixed income going up at 100 billion. And what's happening? The fixed income is they just keep going up, and but that's understandable. I mean, with interest rates of 2%, obviously debt capital is much cheaper and simpler to raise than equity capital. So I see, a continuous, high activity at the fixed income market. But like I said, at some point, companies have to return to the equity market if they've reached their, I guess, debt limits or single borrowers limit, things like that.
Sir, any updates on your plans with PDX in merging the two markets?
Well, I'm the president and CEO now of PDS Holdings. Okay, we have not given up, at least buying the depository. Okay, because we feel if you go anywhere in the world, even here regionally, it's the exchange that owns and manages the depository, and it's very important for risk management. We've had some problems with the some depository operations, which I think could have been avoided if it was the exchange managing the depository. So we have not given up our quest to acquire, at the very least, the depository, if not the whole PDS.
Okay, so hopefully still in the pipeline in 2021. Sir, just a quick update on what your plans are for the bourse from just an administrative perspective. Will you be reverting to the trading hours that we had pre-lockdown? What are your plans in terms of more digitalization approach, especially for retail investors?
Okay, on the trading hours, it's very clear that our shortened trading hours from 9:30 to 1, or the pre-opening at 9 o'clock, has not really affected volume. In fact, like I told you, we're hitting the high volumes with the shortened trading hours. Obviously, it's a very efficient. Our trading is very efficient with this shortened trading hours. Why would we even consider going back or reverting to the all trading? It's really all because of optics. Okay, because while for the local market, everything's going well. We can provide the volumes at this, with this
Mhm.
short hours. But optics-wise, we would be the only exchange operating on a half day, and we probably don't want to be in that situation. So the position we've taken basically is we will maintain the shortened trading hours unless we see a change in the quarantine regime that will be enforced for Metro Manila.
Okay, but for now, it's actually something that's still working for you guys. At least the volumes haven't been affected. And sir, finally, one last question on the realistic targets that you have for 2021. Now, it seems clearer how you've managed to continue with the trading practices in 2020. In 2021, will you be revising the targets that you've had? Is it going to be more of a recovery year, but are you going to still be introducing all of these other projects that you wanted to do, new index funds, indices, short selling? You've also already put in the delisting rules.
Yeah, well, like all our plans that we've mentioned.
How realistic, sir? And what's the timeline?
On the digital side, like I said, our PSEC, that digital platform for local small investors to access the IPO offerings, we obviously are expanding that or improving that to include the payment system, so that a subscriber to an IPO can won't have to go to the
Yeah,
bank.
okay.
Okay, so that's one. We're launching two indices. The first and second quarter, we'd like to introduce a mid-cap index and a dividend yield index. Okay, obviously, like you said, I mean, the foreign investors have been out of the market. We need to attract them back. Okay, and we have been pushing with our regulators to finally give us the go signal to launch the short selling. Why is the short selling important for the foreign investors? Well, see, if you don't have a short selling option, an investor who'd like to go out of the market has no choice but to sell, which is what happened in the Philippine market. But if you have a short selling product, then the foreign investors can remain in the market because they can hedge their position in the markets. And that's the reason we're pushing for the quick approval of the short selling. Of course, they need more products, so we've also, I guess, is the listing rules so that we can get more companies to list. There is an ongoing initiative between SEC and PSE to increase the float of publicly listed companies to 25% over a period of time. So, all these things are, in the pipeline, and we hope to, be able to execute this, efficiently for this coming year.
Okay, so of course, trading never stops. And actually, there's more ways to be innovative during this period and focus on digitalization and inclusion initiatives as well. Thank you so much for that update. That was Ramon Monzon, President of the Philippine Stock Exchange.
Thank you, Danie.
Thank you, sir. And those are the biggest news and insights on the business front this New Year's Day, January 1, 2021. I'm Danie Laurel.
Catch us again on Monday next week at 9:30 a.m. Have a prosperous new year. I'm Jess Delos Santos. We are One News.